Indian markets clearly will emerge as a big gainer eventually. But when classic forces of deleveraging are at play, trust me, it's very difficult to fathom where the bottom is. Yes, there are pockets where value clearly has emerged. We'll talk about some of those pockets. And Hiren Ved, the special guest, is ready. Hiren, good morning. Thank you for joining us. Hiren, I guess the concerns are well documented. Classic forces of deleveraging are at play. But I think it's time to look beyond the cause. Let's look at the effect and the approach. So the question which we are asking everyone on this channel is that how should one approach Indian equities, and has value emerged?
I think we as I mentioned last time in your program, that there are several resets that are happening. One of those reset is the lower global growth that we are witnessing, led by China and the commodity exporting countries. And now added to that list is the oil exporting countries as well. So I think that markets are readjusting to this new reality.
Hiren, so let's just try and simplify this for our viewers. Very good morning, Neeraj here. Assuming that the resets have already taken place and maybe the impact could last for a bit longer, how do you think the next few fortnights, let's put it that way, shape up? Will there be global actions, global central bank action, which will stem the rot, so to say? There's a guest who was saying the PBOC action should happen today at 5 p.m. Assuming that all of that happens, will there be long-term stability in the markets, or do you think these are just quick fix measures?
I think one of the reasons why the situation got so exacerbated is because it's markets 101. You try to control markets and they will give you the opposite reaction, right? I mean, you can't control large markets. You have to allow market forces to step in. So I think the eagerness of the Chinese government to manage the markets is what has brought us to this level. So I'm not a great fan of government intervention. You should let markets play its own course, because eventually if the markets have to price in something, one way or the other they will price it in. And I think we've just had an earthquake, so there are always aftershocks of the earthquake. So I do expect the next few weeks to continue to be volatile, as basically we don't know how global investor positioning has been pre the crash. So I think there will be some readjustments that will take place. People will have to be very wary about emerging markets, because most of the emerging markets are really struggling for growth, and they have a structural issue because they were all leveraged to Chinese growth, and that isn't happening anymore. So I think that there are going to be some long-term change in structural positioning in asset classes and global markets.
Hiren, hi, morning. And within that long-term change, how would India pan out in the piece of the pie?
Well, I think India, we are quite fortunate that India, I think, is going to be a big beneficiary of what is happening globally, primarily because, we are at the receiving end of the commodity fall, in the sense that, we will have huge benefit in terms of our macro, which is already visible in our current account and fiscal deficits. And also, if you look at the Q2 numbers, though the top line growth was pretty tepid, one of the reasons why earnings still held, though they did not grow, was because gross margins improved because of fall in raw material prices. I think a significant benefit in terms of lower commodity prices and raw material prices you will see in the quarters going ahead. So I think that this market which was lacking triggers in terms of earnings, I think the next couple of quarters you should see earnings growth being supported by lower commodity prices and raw material prices, and the depreciation of the rupee, because the rupee depreciation is a very important factor in driving earnings growth in India.
Hiren, amidst all this mayhem, what role do you think the RBI is going to play? I mean, commodity prices are still crashing, currency is getting volatile and weakening day by day. What do you think is going to be the next move from RBI now?
Well, I think if you heard Mr. Rajan yesterday, I think clearly he's amongst the camp that says that he doesn't like to do anything specific and intervene in markets, and I think that's the right thing to do. But my sense is that given the backdrop of what is happening to commodity prices, I wouldn't be surprised if at the next policy meet we have a cut, or maybe even ahead of the policy meet we have a cut. So I think that inflation is in my understanding is truly dead for now. I think given the kind of context we've seen in oil prices, etc. So my sense is that you should see some pretty steep interest rate falls going forward into the second half of the year now.
Hiren, the other big question we are trying to address on the channel today is that should one avoid buying into FI dominated sectors like banks and IT? These are quality companies, but unfortunately foreigners are selling them. Should one avoid buying them because the selling could be large?
Well, one should look at not who owns what, but there are pockets of the markets which where the valuations are higher, so probably there it could still be difficult, but there are certain areas where valuations are pretty reasonable. So I think that generally speaking, given the way the rupee has gone, my sense is that IT and pharma names will be the ones that will find favor immediately in the marketplace. But I think now I can see far more reasonable value emerging in the market than, let's say, where we were probably a month ago.
So glad that you could take time out and really appreciate this gesture from you.
Thank you so much.
Thanks. That's the view coming in from Hiren Ved. Chart your own course. Sure, there's going to be volatility.